Hello, students. So we will continue with the next topic. Today, again, we are doing questions. We are going to solve questions on the loan given by the firm to the partner, and in those cases, what interest we calculate. So let's look at question 15. The question says A, B, and C are partners in a firm sharing profits and losses equally. On 1st April 23, their fixed capitals were 8 lakh, 6 lakh, and 6 lakh respectively. So at the beginning of the year, this is the capital given to us. On 1st of October 23, A gave a loan of 1 lakh to the firm, whereas C took a loan of 1 lakh 50 from the firm on the same date. It was agreed among the partners that C will pay interest at the rate of 10% per annum. So when A has also given a loan, this will be at 6% per annum. Nothing is mentioned, so we will assume it as 6%. Profit for the year ended 31st March 24 amounted to 4,20,000 before allowing or charging interest on the loans. Pass journal entries for the interest on the loans and prepare the current accounts of the partners. Okay, so first we'll write the journal entries. This is solution 15. So our first entry, we are talking about A giving a loan to the firm. So the entry is interest on A's loan account debit to A's loan account. The amount, let us see. A has given a loan of 1 lakh to the firm, and on this he's getting 6%. So on 1 lakh, 6% will be 6,000. But since it is taken on 1st of October, we will calculate it for 6 months. Thus, the calculation will be on 1 lakh, 6% and 6 months upon the total number of months. So this will come out as 3,000. The narration for this is being interest on A's loan provided. What is happening here is this is an expense for the business, and this is a liability. Taking a loan was already a liability. So paying interest on that loan now will show that the liability has increased. The next entry, that will be profit and loss account debit to interest on A's loan account. The amount will be the same. So at the end of the year, what are we doing? When the year ends, being interest on A's loan account closed. Or we can say, or the transfer of interest on A's loan to the P&L account. Okay. The third entry now. Now we are talking about the second person. The second person was C. So C took a loan of 1,50,000 from the firm on the same date. So when C takes a loan, the entry will be, since the partners are not, okay, it is saying that their fixed capitals are this much. This means which method is being followed? The fixed method. The fixed method is being followed. So therefore, we show all our kinds of adjustments now in the current account. That is why the question is also asking us to prepare the current account of the partners. So the entry will be, in this case, C's current account debit. How much is the interest which this partner has to pay? This partner will have to pay on 1,50,000. I think it is 10%. So 10 upon 100 into 6 upon 12. So 15,000 and half of 15,000, that is 7,500. 2. Interest on C's loan account. Amount will again be 7,500. It's calculated in the same way. So in this case, the difference is we debit the partner's capital or current account, depending whichever method we are following, either the fixed or the fluctuating method. So in this, since we are following the fixed method, we are debiting the current account. So our narration will be in interest on C's capital charged. The fourth entry. Now it is going to come in the P&L as an income. So it's going to come on the credit side. So therefore we have to close our interest on C's loan account. So we will debit that account. Amount will be 7,500 to P&L account. Amount will be again 7,500. The narration will be being the transfer of interest on C's loan to the P&L account. Or you can say being the closure of interest on C's loan account. Any of them, just as we wrote on the top in the second entry. So these are our 4 entries which we will do in these 2 cases for the year. Now we have to also make the current account. That was what was asked of us. So C's, no, we will be making for all the partners. So current account, debit, credit. Remember, this is our main solution going on. So in our main solution, first we will do all our main things that have been asked. So first we wrote our journal entries. Now we are making the next thing that is asked, which is the current account. Here we will write particulars. Just make it as it is supposed to be made. You have particulars, the 3 partners' names, again particulars, and the 3 partners' names. Now, what are the items that we write in the current account, which are given to us in the question? Anything about the capital, but which capital? The balance of the current account should be mentioned to us. So that is not mentioned, so we don't have to write that. Next thing, whatever we are giving, either we are giving interest or we are giving any kind of salary or commission, whatever, those things would have come. But nothing is here in this question. So we will make a working note. In our working note, we will calculate by making an account, which will be a P&L account, because we have been told the opening balance or the profit of this account, which is said to be 4,20,000 before allowing or charging interest on loans. So that amount will be written in the credit side. So here I'm writing the profit. It is 4,20,000. Then in the P&L account, whatever incomes are coming to us, so which is interest on, here it was C's loan. That was our income. And we saw it was 7,500. We also saw that we had to pay interest to A. So interest on A's loan. That amount was 3,000. So now we will be left with the balancing figure. So here we have 427,500, which will come on the side as well. 427,500. And this gives us a balancing figure. So our balancing figure will be to profit, or to, you can say, net profit. So we are left with 427,500 plus 7,000 minus 3,000, which is 424,500. So 424,500. And we have three partners, A, B, and C. Since no ratio is mentioned, I don't think any ratio was mentioned. Yes, nothing was mentioned. It was just, in fact, told to us that it was divided equally. So the ratio mentioned is equal ratio, 1:1:1. So we will divide 424,500 into three parts. So divide this whole thing by 3, which comes out as 141,500. 141,500 and 141,500. So this total is mentioned here. Now, this being our profit, this is what gets carried into the profit and loss appropriation account. So this will be transferred, and this comes on the credit side. So we will write by profit and loss account. This amount is 141,500, 141,500, and 141,500. After this, look at your journal entries. In your journal entries, you have one entry which is talking about the current account being debited. This entry. So this entry you have to post into this current account. So here we are saying C's current account is debited by 7,500. So because of interest on C's loan account. So I'm going to write to interest on C's loan account. And I'm going to show this under the balance or the column for C. Amount is 7,500. Since nothing else will come, so let's close this account. Each of these amounts are 141,500 on the credit side. write this 141,500, 141,500, and 141,500. So the balancing figures will be on the debit side. We will call this to balance, carried down, balancing figure. And this is if I ask you which kind of a balance is this, you will say a closing credit balance, because it is found as a closing balance on the debit side. So the amount over here will be 141,500. Here again 141,500. And the last balance would be 141,500 minus 7,500, which is 134. So your answer, let's check what it is. It says divisible profit is 424,500, which is correct. And the current account balances are 141,500 for A, 141,500 for B, and 134 for C, which is the same as we have calculated. Next question. H and S are partners in a firm. On 1st December 23, H gave a loan to the firm of 5 lakh. On the same day, the firm gave a loan of 2 to Samir. They do not have an agreement as to interest. So what does this line mean? They do not have an agreement. This means that they did not conclude as to how much interest they are going to actually charge or give. So only the case where by default some interest will be charged, that will be mentioned. So when you take a loan from a partner, which is this one, H, who had given a loan to the firm, in this case, the interest would be applicable. So the interest is 6% per annum. Okay. So the question says the firm earned a profit of 3,70,000 before any interest for the year ended 31st March. Past journal entries for the interest on loans and the distribution of the profit for the year ended 31st March 24. So the main question is only about passing journal entries for the interest and the distribution of profit. Let's just make that then. Solution 16, journal entries. The first journal entry, which is about H giving a loan of 5 lakh to the firm. So when H is giving a loan of 5 lakh to the firm, the rate of interest is 6%. So this comes out as 6% on 5 lakh makes it 30,000. 30,000 is for the whole year. But we are taking this loan on 1st of December, which means we have it for 4 months. So let's see how will this be written. So interest on H's loan account debit, because this is our expense. We have taken a loan of 5 lakh into the rate. The rate is 6%. So 6 upon 100 into 4 upon 12. So 5 lakh into 24 divided by 1200 gives us 10,000. So we will write 10,000 here and 2. H's loan account because our liability has increased. By how much? 10,000. Again, the narration is being interest on H's loan provided. The next one. We are closing this, so it is an expense for us, as we know. So P&L account, a charge against profits, P&L account, debit at the year end, the amount will be 10,000 to interest on H's loan account. Amount is again 10,000, being the closure of interest on H's loan account. After this, we are told that S had taken a loan from the firm. So the firm gave a loan to S. But no agreement was there, so no interest in this case, in the second case. It is also saying the firm earned a profit of 3,70,000 before any interest. Past journal entries for this and the distribution of profit at the year ended. Now, how much is our divisible profit left? After we have given a loan amount of interest on loan of 10,000, we have a balance or divisible profit. You can write it in your working note. Divisible profit is 70 minus 10,000, which is 3,60,000. So this 3,60,000, if I have to divide it, and there is no ratio given, so this will be equal. So when I have to divide my profit among the partners, I write P&L appropriation account debit to whichever partner we are giving it to. So H is capital. Let's see if it is capital or current. It doesn't say anything. So by default, we are going to assume fluctuating capital. So we are going to write to H is capital account and to S is capital account. The total amount was 3,60,000. So each of them get 1,80,000. Narration being profits transferred to the partners. Okay. This, if you want, you could understand this divisible profit calculation from here also. So assume that you made a P&L account. In this, you have been given net profit. Or just write profit for simplicity. Profit before giving this interest, we have been told it is 3,70,000. And on giving this interest, which is a charge against profit, which is why we will show this reducing our profit in the P&L account. So here we will show to interest on H's loan. Amount is 10,000. So here we are left with a net profit of 3,60,000. Which is what we have distributed here. Okay. So the same thing is shown here diagrammatically with an account, how we have calculated it. Let's go to our next question. Now we are talking about rent paid or payable to a partner. So question number 17. K and S are partners in a firm sharing profits equally. S has given a property on rent to the firm on a monthly rent of 25,000. Solution 17. Okay, so monthly rent is 25,000. The firm paid her rent from April to Jan, which means we have paid 10 months rent. If you count from April right up till January, that is 10 months. And we have paid it by check on 10th of February 24. So that means we have paid rent by us also having a date. So this date has significance. Therefore, we will write this date. Rent for the month of February and March are yet to be paid. So this much is outstanding. Pass the journal entries for the above for the year ended 31st March. So at the year end, what are the entries that we are going to show? Before that, let's show the amount being paid off also. So our first entry is rent count. Let's put the date as well. It's at 10th of Feb. 10th of Feb 24. Here we will write rent account debit. We were told 25,000 per month and 10 months it was paid for. So that made it 2,50,000. 2. We will write cash or bank because we have paid it. Amount is 2,50,000. Narration being rent paid. Again, the second entry. Now, it was not paid for Feb and March. That means it is yet to be paid. Therefore, at the end of the year, which is 31st March, we will show this as something outstanding. So rent account debit, we will show that it is pending. And for that, we will debit the expense account, which is 25,000 into 2, which is 50,000, to outstanding rent account. Or we can also call this outstanding rent as rent payable account. Amount will be the same, 50,000. Narration will be being rent outstanding for 2 months. And one more entry. The last one, which is at the end of the year where we transfer all this expense into our P&L account. We show this as an expense. So that will again be on 31st March 24. So since it is an expense, so P&L account debit amount will be 2 lakh 50 plus 50 makes it 3 lakh 2. Rent account amount is 3 lakh. Narration being rent account closed or transferred to the P&L account. So these are going to be our entries. Next, after this, let's see what is it. Okay, so it says Radha and Rukmani are partners in a firm with fixed capitals of 2 lakh and 3 lakh respectively. They share profits in the ratio 1:2. Both the partners are entitled to interest on capital at 8% per annum. In addition, Rukmani is entitled to a salary of 20,000 per month. Business is being carried from the property owned by Radha on a yearly rent of 1 lakh 20. Net profit for the year ended 31st March before providing for rent was 5 lakh 50. You are required to draw a P&L appropriation account for this year. So let's make the P&L appropriation account. So that is a main part of our solution. P&L appropriation account making. That is question number 17, so 18 now. Okay. So what have we been told? Again, let's read through it. We have been told our fixed capitals. Amounts are 2 lakh and 3 lakh. Profit share is 1:2. Both these partners are entitled to interest on capital at 8% per annum. In addition, our Rukmani is entitled to a salary of 20,000 per month. Business is carried on from the property owned by Radha on a yearly rent of 1 lakh 20, and the net profit before providing for rent was 550. So directly in this account, let's write the headings. So particulars, rupees. Again, particulars and rupees. Okay, just a minute. Now, on the credit side, the first item which we will write will be by profit and loss account. Here we will write our profit which is given. I suppose it's 550. Yes, so 550 minus the yearly rent. 5 lakh 50 minus the yearly rent of 1 lakh 20. Because this amount, otherwise we would have shown by making a working note of our P&L account, and we would have shown this going out from there. So 550 minus 120 gives us 430. Okay. Now, what else is there? The share of profits are 1:2. Both are entitled to interest on capitals at 8% per annum. So 8% on 2 lakh and 8% on 3 lakh for the whole year. So how much is that? So 2 interest on capital. First is Radha, and second is Rukmani. So for Radha, it's on 2 lakh, and for Rukmani, it's on 3 lakh. So 2 lakh into 8 upon 100. So Rukmani, it is on 3 lakh. So 3 lakh into 8 upon 100. So the amounts are 8 2s are 16 and 8 3s are 24. So 16,000 and 24,000. So this totals up to 24, 34, 44. 44 minus 4 is 40. So 40,000 is my total. Okay. After this, what else are we giving? Rukmani is entitled to a salary of 20,000 per month. So to salary, this is for Rukmani. So 20,000 into 12. 12 twos are 24. So 2,40,000. Anything else? Nothing else. Okay, so now we will have to take out our balancing figure. So what is our balancing figure? 4,30,000 minus 2,80,000. 4,30,000 minus 2,80,000 gives us 1,50,000. So divisible profit is 1,50,000. So to profit transferred to Radha's. Now, which account do we have to transfer it to? What is given to us in the question? It's given that they follow the they have fixed capitals, or they follow the fixed method. Therefore, we will have to write current account here, because all these things we show in the current account. So to Radha's current account. Now we know that the balancing figure was 1,50,000. So let's show the calculation. The total, I'm writing it here. And this calculation will be 1,50,000 into 1:2. So that means into 1 divided by 3, which is 3 5s are 15. So 50,000. And Rukmani's current account, this amount is 1,50,000 into 2 upon 3, which is 1 lakh. So this totals up to 1,50,000. And our total was 4,30,000. So this is our answer, which has to be in the book also. Let's see. Yes, transferred to Radha's current account 50 and Rukmani's current account 1 lakh. So these two are done. We also have to write this total on the other side. So 4,30,000. That's our solution. Let's see the next. It says, in case A and B are partners sharing losses and profits in the ratio of their capitals, which were 6 lakh and 4 lakh respectively, on 1st April 23. The partnership deed provides that both partners will get a monthly salary of 20,000 each. Interest on capital will be allowed at 8% per annum. Okay. He will get quarterly rent of 24,000 for the use of his property by the firm. Okay. And on 1st July 23, A and B granted loans of 1 lakh and 50,000 respectively to the firm. During the year ended 31st March 24, the firm incurred a loss of 17,250 before any adjustment is made as per the partnership deed. Prepare the account showing the distribution of profit and loss. Now, whenever there is a loss given to us, then this loss has to directly be shown in the P&L account. We know that we don't show any kind of loss coming into the P&L appropriation account. So let's show this in the P&L account. This question is indirectly asking us to make a P&L account. Suppose this is question 19, yes. So P&L account particulars, rupees, particulars, and rupees. So we have been told the loss is given to us of 17,250 before any adjustment. So on the debit side, the first item which we write is to loss. Amount is 17,250. What else? Okay, so definitely we will not give a monthly salary to these partners because the firm has incurred a loss. We will not give interest on capital because the firm has incurred a loss. So these two stand out of the question. We are told A will get a quarterly rent of 24,000 for the use of his property by the firm. So this is a charge against profit. So this will definitely have to be given. So we are paying 24,000 per quarter. Therefore, to, here we will write to rent. This is A. And it will be 24,000 into 3 quarters or 4 quarters? 4 quarters. That means 24 into 4 means 96. So 96,000. What else has to definitely be given? It is saying on 1st July, A and B granted loans of 1,50,000 to the firm. Again, when you're giving a loan to the firm, this has to be given interest on. So A and B will get interest. So we will write this on the debit side because this is again a charge against profit. So to interest on loan. For A, it is going to be on 1 lakh, and for B, it is on 50,000. So 1 lakh into 6 upon 100. It is given on 1st of July. That means 9 months till the year ends. So 9 upon 12, which is coming as 1 lakh into 6 nines are 54. Divide the whole thing by 1200. Gives us 4,500. B's interest would be on 50,000. So that is 50,000 into 6 upon 100 into, again, 9 upon 12, which is coming out as just half of it. So half of 4,500 will be, I suppose, 2,250. Yes, 2,250. And these two total up to 6750. 6750. 45, 55, 65. 65 and 2. 67.50, correct. So this should be fine. Now, what else have we been told? Okay, so we are just asked to prepare this profit and loss account and show the balance, which is transferred to the partners. So here, 2250 plus 17,250 plus 96,000 gives us 115,500. So 115,500. This will come on the other side. Another thing to note is this is a loss because it is found on the credit side in the profit and loss account. So this will be my net loss. So by net loss transferred to, it will be given to these both partners to share. And the profit or loss sharing ratio is 6:4, which is 3:2. So their names are A and B. So A is which account? It doesn't say anything. So directly A is capital account. Amount will be 115,500 into 3 by 3:2, right? So 3 upon 5. So 115,500 into 3 divided by 5, which is 69,300. And B's capital account, the amount will be 115,500 into 2 upon 5. 46,200. So this should come out as 115,500. So let's see if these are our answers. Oh, it's different. Let us see what went wrong. Something somewhere. Was it? It says 72,000 and 48,000 should be the profit. So 6:4, 2 3s are 6, 2 2s are 4, 3:2. And just a minute. There's something just in the end, I think, which we have done. Let us see it again. I suppose our totaling is wrong. Yes. So what is our totaling? $17,250 plus 96,000 plus 6750. Yes. So this is what has gone wrong. Let us correct this. This is 1,20,000. This should be 1,20,000. Again, on the other side, make it 1,20,000. This also 1,20,000. These amounts we'll have to change. This will be 1,20,000 also. And here also. So be careful when you do the questions. So let's see now what is coming. 1,20,000 into 3 divided by 5 gives us 72,000 in the first case. And the second, I suppose, is 48. And this totals up to 1,20,000. So that is our answer. 72 and 48. 72 and 48. Let's see this next one. It says A and B are partners in a firm sharing profits in the ratio 1:2. Their capitals on 1st April 23 were 4 lakh and 6 lakh respectively. As per the partnership deed, A will get a monthly salary of 15,000 and interest on capital is to be provided at 10% per annum and charged on drawings at 12% per annum. During the year, A withdrew 30,000 and B withdrew 50,000. Okay, so we have been told some partner is getting salary, he's also getting interest on capital, and he's being charged interest on drawings. Drawings are given for the year. The firm had a loss during the year before the above adjustments. The loss given is 60,000. You are required to prepare an account showing the distribution of profit or loss. Now, this question is saying that we have got a loss. So definitely we will not make a P&L appropriation account. But at the same time, since we are told that interest on drawings is given to us in this question, so that is something that the business is getting, and interest on drawings is shown in the profit and loss appropriation account. So in this case, we will make a P&L appropriation account to solve this question. And show that loss as well on its debit side. So this is solution 20. P&L appropriation. We are showing this on the debit side. So I'm going to write to loss. The amount given is 60,000 during the year before the adjustments. And among the adjustments, there is nothing which is a charge against profit. So I'm just directly going to show this on the debit side. So 60,000 is what I write here. On the credit side, I am getting interest on drawings. So I'm going to write interest on drawings. Who is giving me? Both of them are giving, I suppose. During the year, A withdrew 30, B withdrew 50. 10% was interest on capital, 12% was on drawings. So on 30 and on 50, A and B. So for A, on 30,000, 12% into the average period in this case, we know is going to be 6 upon 12. The reason for that is because when nothing is mentioned and the total drawings are given to us, we assume the drawings were done at the middle of every month. So if we had to calculate the interest on drawings, we have to calculate average period, which in that case would be time left after the first drawings, which is 11.5, plus the time left after the last, which is 0.5 divided by 2, which comes out as 6. So that is why I've taken this point or this number as 6 over here. Then what is the answer for this? So 30,000 into 12 into 6 divided by 1200 gives us 1800. For B, it is 50,000 into 12 upon 100 into, again, average period is 6 upon 12. So in this case, let's see what this is. 50,000 into 12 6 is 72 divided by 1200 gives us 3,000. So my total is coming out as 4,800. Now on the debit side, we have been showing a loss. Question is asking us to prepare and show the profit or the loss, whatever. We have to show it in whichever account. So now, since our loss is already there and we have earned some income as well, this was our income. So we will take out the net effect, or we will take out a balancing figure. A balancing figure comes on the debit side, which we will call to loss transferred. Sorry. It will not come on the debit side. This will come on the credit side. Our balancing figure is left on the credit side, which we will call by loss transferred to. Which kind of an account? We have been told the capitals were this and this. So nothing is mentioned. So therefore, this is the fluctuating method that they're following. So A's capital account, which is going to be 60,000 minus 4,800. Total loss 60,000 minus 4,800, which is 55,200, I suppose. 60,000 minus 4,800, 55,200. So 55,200, what is the ratio? 1:2. So into 1 divided by 3, which is 55,200 divided by 3. 18,400. And B's capital account amount will be 55,200 into 2 upon 3. 36,800. Which totals up to 55,200, and this totals up to 60,000. So on both sides, we will write this. Let us copy this down, move it down, and close our count. So this is my total on the debit side as well. So this should be our answer, 18,400 and 36,800. 18,400, 36,800. Okay. Now let's go to the next question. This says X and Y are partners in a firm sharing profits and losses in the ratio of 3:2 with capitals of 10 lakh and 5 lakh respectively. So two partners, capitals are given 10 lakh and 5 lakh. The ratio is given 3:2. As per the partnership deed, they are to be allowed interest on capital at 8% per annum. So they are getting interest on capital at 8% per annum. The net profit for the year ended 31st March before providing for interest on capital amounted to 45,000. Show the distribution of profit. So simply it is saying prepare a P&L appropriation account. So let's prepare a P&L appropriation account. So we have been told our profit. On the credit side, I'm just writing it. It is by P&L account. Amount given is 45,000. Now we are told X and Y are to get interest on capital at 8% per annum. So on 10 lakh, 8% means 80,000. Similarly, on 5 lakh, 8% means 40,000. So 80 and 40 makes it 120. Okay. So we are trying to say that we are going to show interest on the capital and we are going to give, I suppose, the names of A and B, no, X and Y. So X and Y, we calculated and we saw this is coming out as 80 and 40. Which is coming out to be a total of 1,20,000. Now, can you imagine what is written here? This is saying you have 45,000 and you're going to give 1,20,000. First of all, this is not possible. We do not have enough money in our pocket in order to give out 1,20,000. In our pocket, we just have 45,000. So the maximum that we can give is 45,000. So how will we give this 1,20,000? Question is saying we have to give 1,20,000. So we cannot give this. Now in this case, what would we do is we will divide this amount, this 45,000, in a proper way. Now, which is the way that we will divide this? We will, in fact, write interest on capital and give 45,000 in a particular ratio. Now, which is that ratio? See, looking at this on the top, we know that we are giving him 80,000 and the other fellow 40,000. So this ratio, what you're going to give it is 80,000 is to 40,000, which is 2 is to 1. So when it was supposed to be given 120, in that case, if I divide 120, sorry, excuse me. If I give 120, if I give 120, I would give it in this ratio of 2 is to 1 by giving 80 and 40. That would have been fine. But right now I do not have 120. What I have is 45,000. So 45,000 also, I should divide it in the same ratio. So therefore 45,000 into 2 upon 3, which is 30,000. And Y would get 45,000 into 1 by 3, which is 15,000. So my total comes out as 45,000 and I'm left with no other profit. So therefore, everything is consumed. So here I would write 45,000 and close this account. So on both sides, I have got 45,000. So what have we done differently here? Thing that we have to do in such cases is when we do not have enough of profits or enough of amounts on the credit side in order to distribute on the debit side, then we divide the amount of available profits. So we divide the amount of available profits in the ratio of appropriations. And what do you understand by this? What I've written here is that when we do not have enough of profits on the credit side, like in this case, we did not have enough of profits. How much did we have? We had only 45,000. And what did we say? We only have this much to distribute. When we calculated it, we saw we have to give 1,20,000. But since we do not have 1,20,000 with us, so we will just use the amount of available profits. So whatever I written over here, I've written, you divide the amount of available profits in the ratio of the appropriations. And what is the ratio of the appropriations? What is the actual appropriation? The actual appropriation was 80,000 is to 40,000, which came out as 2 is to 1. So divide the available profits in the ratio of appropriations. Okay. This is what you have to do when you do not have enough of available profits. So we'll stop here. As we have seen a couple of questions by now, where we saw how much we calculate as interest on the loan which the firm gives the partner. We saw questions on the rent paid to a partner, and we also saw questions on ratio of appropriations. We saw questions even on what happens when there is a loss in the firm, in this partnership firm. So I'd encourage you to carry on your work, look for more questions, solve more questions which are there in the book, and at the same time, like it, share it, and subscribe to this channel it'll benefit you to a nice extent. So I wish you all the best till we meet again.